Richard Bernstein, CEO and Chief Investment Officer of Richard Bernstein Advisors, joins me. Okay, so basically, you're positioning for a pause. Why is that?
So, Contessa, I think people have forgotten what the Fed's role actually is in the economy, and that the Fed does not directly touch the economy. If the Fed is cutting rates, they do so explicitly to lower the cost of funding for banks, which the Fed hopes, keyword hopes, will spur more lending, which they hope, again, that word, will spur more economic growth. So the Fed lowers rates, hoping to get more lending, which they hope will get more economic growth. So the question we should all be asking right now is, where's the hiccup in the financial sector that is prohibiting lending, that is slowing GDP growth? And the answer to that is it doesn't exist. Financial conditions are remarkably easy. We know credit spreads are very tight. We're seeing that in the equity market with SPACs and meme stocks and all this kind of stuff. We're seeing it in cryptocurrencies. You can see the financial conditions are very, very easy. And GDP prior to the shutdown was tracking about 3.5% to 4%. So our attitude was that the Fed was cutting rates, but the question is, did they need to cut rates? The answer to that is probably no. And I think that's why you're seeing the volatility right now, is that that's coming around.
You're looking at the speculative nature of investments this year. For instance, that people who are participating in options are at a record high. People who are participating in levered ETFs, record high. And in very low stock prices, record high. There's been a lot of risk taking. Does that give you an opportunity right now going into the end of the year?
Oh, so Contessa, I think it presents tremendous opportunities, because basically the way I would look at it right now is boring is good. That if you look at things like basic dividends and the compounding of dividends, how boring is that, right? How often do you guys talk about boring dividends and the compounding of dividends, right? Nobody wants to hear that. Or if you think about quality outside the tech sector, like especially non-U.S. quality, is growing faster than the Mag 7, and like nobody cares. So you've got these great opportunities outside this speculative sphere that everybody's in. So I think, Contessa, I think the volatility in the market, if it continues, is just going to show people these other opportunities.
Okay, so are you looking at, I mean, the European markets have been on fire. Are you looking at Europe in particular? Are you looking at emerging markets? Where specifically do you think that your money could really gather some steam and show some return?
Right. So, Contessa, I don't think you have to be overly sexy on this one. I think you just want to increase, for most investors, it's just a matter of increasing non-U.S. exposure. We're particularly focused on quality, large cap, high quality stocks in Europe and in Asia, ex-Japan, or ex-China, rather. I'm sorry. Quality stocks in Asia, ex-China. We think there's a lot of opportunity in those kind of stocks. Big dividend yields, or bigger, I should say, than what you get in the United States, faster growth, very cheap valuations. And I think importantly in what I just said, the difference between people talking about non-U.S. over the past year, 2 years, 5 years, based on valuation, is that now there's actually a growth story to go along with it.
And are you pulling back on, say, crypto or AI?
Well, we were never in crypto to begin with, much to the dismay of crypto fans, and we've been critics of crypto for quite some time. But I think in terms of AI, yes, I think that investors should be diversifying their portfolios. Look, you know, everybody wants to bet these days, so let me use the correct phrase here. You should play with the house's money. If you've made big gains, take some off the table, play with the house's money, and go diversify your portfolio. I think that would be the really prudent thing to do, and that's basically what we've been doing for quite some time.